and I'm joined by Benjamin Collett, head of Japanese equities at Lewis Capital Markets in Hong Kong. Mr. Collett, welcome this morning. If I can just look first at this intervention in terms of the scale. We don't know yet, do we, just how much Japan has intervened in the markets, do we?
No, I mean, the figure that was being bandied around this morning was that the BOJ had extended $1 billion worth, effectively, of currency for the Ministry of Finance to intervene with. Now, that we're assuming is the first in many many clips of cash that they're going to be allowed to move. Now, the last intervention in 2004, that whole procedure over the course of 3 months usurped some $174 billion worth of yen equivalent currency. So early estimates are about $1 billion today. That would leave, using the previous intervention as a benchmark, quite a lot for them to get through before they're done. And
so far, it appears to be having the desired effect. How long do you expect that to last for before they have to dip in again?
Well, that's a very difficult thing to obviously to identify. But I think what they have successfully done is caught the market very much by surprise today, and not just the FX market, but certainly the equity market as well. And in doing so, what they've also done is added a certain risk element to buying the yen. Now, the yen's been appreciating very much in terms of a risk-off trade versus global comparisons. Now, intervening in the yen hasn't done anything to affect the global reasons for buying the yen, but what it has done is made it a much less safe play, so to speak. So uncertainty obviously can last quite a long time, but the other thing, as a couple of traders that have mentioned previous today, I heard you talking about the Deutsche trader saying now is the time to buy the yen. I totally disagree with that. I think the uncertainty that's now encapsulated in going long yen, I think can persist quite a while. We are obviously going to be testing the resolve of the BOJ, but and the Minister Noda, but in terms of absolute levels or how long it's going to take to test that level, it remains to be seen. Certainly, there's enough uncertainty to last for quite some time.
No, as you say, the situation looks very uncertain at the moment. But how political does this move look? The timing of it certainly does smack of politics.
Yeah, well, it's actually quite brilliant timing, which was also very unexpected. Brilliant timing from Japanese politicians. But obviously, after Kan wins, well, he wins the prime ministerial position the day after, really when no one's expecting anything to happen. The Ministry of Finance dictates, we suspect, to the BOJ that they need to intervene. So it was very effective in catching the market off guard, and that would have added at least 30–40% to its effectiveness. Obviously, they're getting some pretty good bang for their buck at the minute. So, but certainly it was absolutely a politically driven intervention. They needed to do something to consolidate the party. Kan needs to demonstrate that he has the ability to enact the popular policies of his opposition or previous opposition, Ozawa, and this was one of the things that Ozawa actually had right. So it's actually a very positive indicator. We'll just
now,
see
we've
how
been
long
told
it lasts.
that the 82 yen to the dollar level is the level that they wish to stick at. That does also seem, from what's happened in the Nikkei today, to be the level that most exporters would like to see.
Yeah, the thing about the levels, this is the first time, the very interesting thing about this is that normally the rhetoric surrounding intervention has been concerned with appeasing aggressive moves and assuaging volatility. Now they've chosen an absolute level, so it's a very interesting time in terms of intervention policy. As far as an absolute level, the exporters and Japanese exporters as a group of companies will manage a yen at whatever level through various means, be it hedging or be it offshore production, etc., etc. But the longer it takes for them to get to a particularly strong level, obviously the easier it is for them. Now, Noda's drawn the line in the sand. It doesn't actually say that they are going to intervene the moment the yen, should it cross 82. Okay. They're using 82 as a target rate, and again, it creates enough opacity to create an uncertainty with traders, and I think we'll naturally gravitate around that.
Okay, Ben Collett, thank you very much indeed.